Hi, we are Sales Tax and More. Today, we are talking about if states are still enforcing notice and reporting. The short answer is it depends. Let's talk about what notice and reporting is first. Notice and reporting started back in 2010. The state of Colorado wanted some of the remote revenue being generated by Amazon. The company had not been collecting taxes. Colorado believed that these third-party sellers should be collecting and remitting tax. They thought that if a company had inventory in a warehouse in their state, then they needed to collect and remit the taxes. However, there wasn't a warehouse in Colorado at the time. This inhibited the state from collecting the revenue because they weren't able to make the company register. The company didn't have a link or connection with the state, which is called nexus. Therefore, Colorado decided to find ways to motivate sellers to voluntarily register with the state. They moved to require sellers to do three things. First, they need a statement on their website saying that they're not registered to collect tax. Sellers then need to tell their consumers to self-assess the tax and remit it directly to the state as a consumer use tax. Next, sellers would have to get a notice at the point of sale. Then, they would have to remind their consumers to report and pay the tax directly to the state. Sellers would also need to turn over a list of all of their customers to the state. Other states decided to say that minimum penalties were $20,000 per instance. Washington and Pennsylvania were examples of these states. They have since intentionally phased out their notice of reporting rules. Most states have followed this direction, so currently the two big places to be concerned about are Oklahoma and Puerto Rico. First, let's take a look at Puerto Rico. If the seller is not registered in Puerto Rico and they're selling there, they could potentially face penalties in excess of $30,000. It is recommended to register in Puerto Rico if a seller's sales are material in the territory and they want to continue making sales there. Once sellers get registered, they don't have to comply with the notice and reporting requirements. Now, let's look at Oklahoma. The state implemented their notice back in July of 2018 with a threshold of $10,000. It's still in effect that when a seller hits $100,000 that they have to register. But at $10,000, they have the option of either registering or notice and reporting. Oklahoma requires a seller to do three things. For each one they fail to comply with, sellers pay the lesser of $20,000 or 20% of their revenue into the state over the past year. Again, it is recommended for selling into Oklahoma to get registered once sellers hit $10,000 of taxable sales. For more information and other free resources, including webinars, blogs, and podcasts, or any questions, you can reach out to us at salestaxandmore.com.